What's going on, guys? Right now, the portfolio is down $39, and in the after hours, I am down $12. Let's talk about the portfolio, guys. You can see at the bottom, T paid a dividend of 51 cents per share. I was credited $25.50. The markets have been really lagging as of late. A lot of people have been trimming their positions. A lot of people have been selling off, but we're going to continue pushing this portfolio upward. Let's talk about the week, guys. Past week, I'm up $73. In the past month, I am up $98. We can see a lot of valleys and peaks right here in this little mountain graph, up and down, up and down. And in the past 3 months, I am up $980. So still quite good for my portfolio. I'm going to jump right into the portfolio, guys. There's been somewhat of a lot of changes. I'm going to talk about right quick what I've been noticing with my portfolio. And I was making a comparison to the Robinhood portfolio and the M1 Finance portfolio, and I definitely saw a lot of similarities. I saw a lot of the same stocks in the Robinhood portfolio were in my M1 Finance portfolio. So somehow all the stocks that I wanted to invest in, all the high dividend paying stocks that were on sale, somehow ended up in the Robinhood portfolio, and that quite bugged me a lot. So what I did was I started changing my portfolio up just slightly in just a little bit. I'm going to quickly talk about. You guys probably see from the title, an ETF was sold. So we're going to figure out what that ETF actually was. But let's jump into the portfolio and see what changes have been made. Apple 209 did not have a good day, down $1.37. I'm still up big on them, 3 shares, average cost 172. My total return is 21%, so that's still pretty good. I've thought about adding some shares to Apple, but right now over that $200 mark, I don't feel comfortable doing that, so I'm just going to hold it out. Apple's a pretty good company. They had a very good earnings report, and I like them a lot. So it's probably the only tech stock that I fully believe in, I fully trust to invest in at the moment. Let's talk about Costco, guys. 242. It's been taking a nasty dip as of late. Down for the past week, it is actually down 0.74%. My average cost is 246. 3 shares of them. Right now, I am down $9. So Costco is still a pretty good stock. I think they have just a little bit of recession utility. It's quite overvalued at these levels, and that's the only reason why I bought 3 shares of Costco. I didn't really go all in on Costco because it's at all-time highs, but I definitely think that Costco has a lot more room to grow. They are a very solid business, and they were a business at least when I was younger, that I really wanted to work for because they treat their employees with respect and they pay pretty good. So, next stock in my portfolio, Johnson & Johnson. So one stock that was removed was McDonald's. McDonald's is one of the stocks that I was talking about in the beginning in the video. That is also in my M1 Finance account. So the thing is that McDonald's also had a good earnings report. So I think the stock jumped up to about 204, and I believe that since I have McDonald's in my M1 Finance portfolio, I might as well sell high and get profits as much as I can. I'm really going to miss McDonald's because they had a lot of recession utility, but I believe Johnson & Johnson can hold the fort here. 10 shares, average cost 139. It's over $140. So Johnson & Johnson did have a pretty good dividend. I actually think they are a dividend king or a dividend aristocrat. I am up 1% on them for a $20 return. Johnson & Johnson, I like them a lot. Let's talk about a new stock in the portfolio. That is Pfizer. And the reason why I put Pfizer in the portfolio is because I wanted a biopharmaceutical stock or a pharmaceutical stock in the portfolio along with Johnson & Johnson, so I can have a really good stranglehold on that healthcare sector. But I think my average cost, yes, indeed, is over under $30. Well, not under $30. It's right at 39. $39.89. So I wanted to buy some shares of Pfizer just below $40. So that's what I wanted to do. Total return $50. I guess I bought them right on time because they really did have a good earnings report. And again, this is another stock that I believe has a lot of recession utility, even though pharmaceutical stocks have not been doing very well. AbbVie's not been doing very well. I think Teva Pharmaceuticals has taken a nosedive, but Pfizer has a really large market cap and a pretty solid dividend. So I really like them a lot, and I like them being paired with Johnson and Johnson, sort of have that healthcare sector locked down. Let's talk about another new stock in the portfolio, Altria. This is a stock that I actually have a little bit of this in my M1 Finance portfolio, but the reason why I bought Altria right now, 44 shares, total return I am down $17, but it has a pretty good dividend, 80 cents per share. So I'm going to be getting paid pretty well with this stock. But I think I replaced I think I want to say NRZ. I replaced New Residential Investment Trust with Altrio because I think both stocks have their own risk, but I think if I had to do like a calculated risk, I definitely like Altrio more because they're doing a lot of good things that I like to see. So they just have a smart business. A lot of people say, hey, why are you investing into cigarettes and all this other stuff? But I think that Altria is they have a good business and they're working around that. So they're not simply focusing on cigarettes anymore. They're focusing on a lot on vaping, which seems to be like the new thing now. People think that vaping is like a lot safer, but one of the big things that I like about Altria is that they're not fighting the FDA anymore. They're actually getting things approved from the FDA, and I think they had something a couple of days ago that got approved. I forgot what it was, but the stock jumped massively. I think it jumped like 2% that day. I think it was around April 30th. It was around here when I bought it, and then they announced something, and then the stock jumped up. So the FDA approved something, and the stock went up. So they're not fighting the FDA anymore. They're trying to work with the FDA. They just don't sell cigarettes. They sell vaping, and they're getting into the cannabis industry. So they're doing a lot of things that I like to see that takes the focus away from their cigarette sales, which have been not very good these past couple of years because obviously people want to live healthier lives. But I believe the combination of vaping and the cannabis industry and getting things approved from the FDA is going to drive the stock up once people realize that the fears are overblown. And, Altria plays a pretty good dividend. Now, right now, I would say that this stock under $60 is it's quite undervalued. But again, guys, do your own due diligence and we'll see. Take a look at next stock in my portfolio, AT&T. So there's still some similarities with the M1 Finance portfolio and my Robinhood portfolio, but I'm trying to eliminate that. I want my Robinhood portfolio to be as different as possible from my M1 Finance account. AT&T $30, and I have a good day. The markets in general have been very stagnant as of late. A lot of things are starting to come back down. A lot of people are trimming their positions. 50 shares, average cost $31.15. I thought about buying some more AT&T, but I'll probably buy another 50 shares once it hits that $28, $29 mark. So that's what I'm shooting for. Big business, big corporation, too big to fail. A lot of people have them as their carrier. I have them certainly as my carrier. And they did pay me $25.50 with that dividend. So again, AT&T, I love them a lot, and I'm gonna continue to hold here. Next stock in my portfolio is Disney. Right now, $134. Disney stock that has massively went up, and the reason why I put them in the portfolio because I like what they're doing. It's quite a shame that I missed that spike up because I actually had them in the portfolio before that spike. I believe I may have had 3 to 10 shares, but I missed the spike because I needed to move the money elsewhere. But Disney is starting to trend back down. A lot of people are starting to take profits with the company, and that's what I was waiting for. I was waiting for an opportunity to get back in. I think the stock got as high as I think it was around 142 before they started taking a nosedive. It's fully priced in at the moment. A lot of people thought that the Avengers Endgame would push the stock higher. It didn't. But let's take a look at my cost. 5 shares for an average cost of 136, and I'm down $9. So my plan with Disney is that for every $5 that it drops, I'll buy some more. So if it drops another $5 from I would say like 135 all the way down to 130, I'm going to add another 5 shares. So it'll reduce my average cost. And the thing with Disney is that again a huge company that's too big to fail. They're doing a lot of good things with the movies. They still have yet release The Lion King and Aladdin. So there's a lot of good stuff on its way. They're buying up all these other streaming services like Hulu. I don't know how to pronounce it, Hulu or something like that. They have Disney Plus, and I think right now, shares look high, but I think in the future, the average cost of 134 is going to look pretty good in I would say 2 years or so. It's yet it's yet to be determined how profitable Disney Plus will actually be, but I definitely think that for $5 a month, you can't beat that price. So let's talk about my ETFs right now. So we can finally see what ETF was sold. And I'm gonna talk about that right now. Vanguard Dividend Appreciation ETF right now, $112. So sadly, for all my people who may have liked SCHD, I apologize, but that ETF is no longer in the portfolio. Right now, my shares is 10, average cost 113, and I'm down $5 for VIG. So why did I sell SCHD? Well, there's many reasons why I sold, and I'm going to talk about why I did that. So the reason why I sold SCHD is because I just felt that I had a lot of money allocated into that ETF, almost $3,000, and I wanted that money to be spread out just a little bit more. Another reason why I sold the ETF is because I thought that I wanted to get into Pfizer, which dipped below $40, and they both have similar dividends, and I can rely on Pfizer to play out a pretty steady return on like SCHD, which they seem to fluctuate between $29 and $40. I mean, excuse me, not 29 cents and 40-cent dividends. So with Pfizer, I know I'm always going to be getting a short $18 every 3 months. And Pfizer and SCHD pay on the same month. I think they do. I think they pay in June. So that was another reason why I sold SCHD. But I would say the last reason why I sold SCHD is because VIG is still a pretty good ETF, dividend appreciation. It sort of matches the flow with what my portfolio is trying to do, compound the dividend. But this ETF and SCHD are very, very similar, guys. The only difference that I can think of is that SCHD has an expense ratio of 0.07 and VIG has an expense ratio of 0.08. So the thing is that it's very similar holdings. It's very similar allocation and sector percentage. VIG has VIG is very, very heavy on industrials and consumer staples, the same way SCHD is. So the reason I thought that buying VIG for a cheaper price would allow me to have extra money, like an extra $1,500 to put into another stock, like another high dividend paying stock like Altria, which is that Altria is pretty much a good steal right now. It's risky, but it's a calculated risk that I like. So Vanguard Dividend Appreciation ETF, again, guys, is the new ETF in my portfolio, and I like this stock. I mean, I like this ETF a lot. It's basically SCHD with a point one increase of an expense ratio. So yeah, pretty good to see there. Next ETF in the portfolio, Vanguard Stock Market ETF, total stock market. Shares 50, average cost still up $1,000, $1,359, 22%. One of the core holdings in the portfolio. Portfolio diversity was still kind of high, 33%. I'm looking to get that down to about, I want this down to about 25%, and that's the reason why I've been adding some money into the portfolio. But yeah, Vanguard Total Stock Market ETF. This is an ETF, definitely a long-term hold. There's no way I'm going to sell unless, like 5 years have passed or something like that. But this ETF, I'm not even thinking about selling. I sold SCHD. I cashed out on them. And one more thing I wanted to say about SCHD was my average cost for SCHD was still quite high. I think it was around $50. So, I did not buy SCHD on sale, unlike Vanguard Total Stock Market ETF, which the average cost is a ridiculous $121. So, and the last ETF in the portfolio, Power Shares S&P High Dividend ETF, $42.27. Right now, my total return is $368, just below 10%. But if you factor in all the monthly dividends I've been getting, I'm probably over 10% with this ETF. A very good ETF. Definitely one that I'm planning on holding for years to come, unless I lose my mind or something like that. 100 shares. I would like to have some more of this of SPHD if it ever goes back down to like $38 or $36 again. I'm definitely looking forward to adding to SPHD and compounding that dividend. I would get a dividend every single month from this ETF. I've got you've guys seen it, $14 here, $14 there. Everything adds up. And that's going to do it for my portfolio, guys. Let me know what you guys think. I know I've been moving stuff around. I'm trying to make my portfolio, at least the Robinhood portfolio, a little bit, different from my M1 Finance, because I was comparing the two and I saw just a lot of stocks that I have in an M1 Finance account into this Robinhood portfolio. McDonald's, AT&T, Altria. I'm trying to, change things up. I'm adding Disney, I'm adding Pfizer, pretty good stocks to see. I know they're kind of high right now, but I think as long as I hold on for the long term, those are going to be pretty good buys. Vanguard Dividend Appreciation ETF, yes, it's still quite high, but I only have 10 shares. It's not a very huge allocation of portfolio diversity, only 5%. I'm still going to get paid a pretty good dividend from VIG. It's not as good as I would have had it with SCHD, but I'm telling you guys, these both SCHD and VIG are very similar. Due to due diligence, you guys will see what I'm talking about. But I'm going to cut the video here. Investing $22,172. The markets have been very flat lately. There's been a lot of talks with the Fed. The Fed are talking about interest rates again, and everybody's just waiting and seeing what they're going to do, and they're selling off, and people are panicking. But again, I have a long-term mindset. I want to hold on, and I'm not going to be doing any major moves anytime soon. So that's going to do it, guys. I'm going to cut the video, and I'll see you guys next time.